SpaceX is preparing for one of the biggest Wall Street debuts ever. The company is expected to list on Nasdaq under the ticker SPCX at a valuation of around 1.75 trillion US dollars. Investors are not just looking at rockets, they are looking at Starlink, Starship, defense contract, and the future space economy. But the big question is simple: is this once in a generation opportunity, or is too much optimism already priced in? Here are the key IPO details. SpaceX is scheduled to list on June 12, 2026. Trading begins when the Nasdaq opens at 9:30 a.m. Eastern Time, which is around 7 p.m. in India. The IPO price is fixed at $135 per share. The valuation is around $1.75 trillion dollars, and the IPO size is estimated at around $75 billion. Dollars. For Indian retail investors, direct IPO allotment may be limited. Most may only be able to buy after listing through international investing platforms or gift city routes, depending on availability and routes. The bullish case for SpaceX is powerful. Investors are not valuing it just as a rocket launch company. Starlink gives SpaceX a recurring revenue engine through satellite internet. Starship could create long-term opportunities in space transport, deep space missions, and commercial activity. The company also has defense and government contracts, which provide strategic value and visibility. And there may be an additional upside from the links with AI and the broader Musk ecosystem. So, the bull case is that SpaceX is strategic infrastructure, not just an aerospace company. But the valuation leaves very little room for error. SpaceX is expected to be valued around $1.75 trillion. Dollars. For 2025, the company reportedly had a revenue of $18.67 billion and a net loss of $4.9 billion. It also reportedly took a $20 billion bridge loan before the IPO. That means investors are paying a very high price for a future growth. If execution slows, cost rises, debt becomes a concern, or growth disappoints, the stock could reprice sharply. The story is strong, but the risk is also high. The debut itself could be very hot. Demand is reportedly much higher than the available shares. A limited public float can create scarcity, which may support the share price early. Nasdaq 100 fast track inclusion could also force index funds and ETFs to buy the stock. But this early strength may not reflect the fundamentals alone. Later, when the lockup period expires and more shares enter into the market, supply could rise and volatility could increase. So investors should not only confuse a hot debut with a risk-free investment. The key message for investors is buy the vision, but do not chase the hype. SpaceX may become one of the defining companies of the space economy. Its listing could also lift related space stocks like Rocket Lab, AST Space Mobiles, Intuitive Machines, Planet Labs, and Redwire. It may even influence future IPOs from AI and deep tech companies. But investors should think long term, enter gradually, and watch the debt, losses, and cash flow. For Indian investors, especially, a staggered approach may be better than rushing in on the listing day. SpaceX may be a huge opportunity, but patience may matter more than FOMO. Thank you.